We will be moving on now to our next panel, which is a very important panel that's ahead of us, Venture Capital for Spin-offs. And Nina Wös will take over the moderation of this panel. Herbert Gartner, Markus Wanko, Hermann Hauser, and Lucian Wagner are with us. Nina, thank you for taking over the moderation for this panel, and I'd like to hand over to you.
Which is very important.
Thank you so much. So it's a true pleasure to be here today.
This will take over the moderation of.
Okay. Yeah. So hope the tech setup is fine for everyone, and all of us can hear each other, and also the audience can hear us. So a very warm welcome from my side. I'm going to briefly introduce the panel, and then already going to kick this off with the very first question. So we are going to talk about university spin-offs and how to finance them, which is a crucial element to really get innovation off the ground and make sure that this category is also really on the map when it comes to startup investments. So I'm going to start the intro round with Hermann. He is one of the most accomplished investors when it comes to tech and especially deep tech. He is considered to be the father of the Silicon Fan, with over more than 1,500 companies in the technology and life science sectors. And since a couple of years, he's also investing in early stage companies in Austria. Welcome, Hermann. We also have on the panel Herbert Gartner. He is one of Austria's leading venture capitalists with a venture capital company called EQ Venture that is not only active in Austria, but also across the globe with hubs in Germany, UK, Israel, USA, and China. So we see the global ambition that is present here on the panel. We have Lucian Wagner. He is based in Switzerland, dialing in from the US today, but usually focusing on Swiss investments, especially in the early stage sector. And also joining the round is Markus Wanko from IST Cube, where he works with university spin-offs on a daily basis. And this is going to be interesting to discuss, and I would already kick it off with the very first question, which is looking at your portfolios and also at the investment thesis you're following. How much of your funnel is actually consisting of university spin-offs? And if you look at the portfolio, how much do they make in terms of your commitments? Maybe, Hermann, you want to start the round with your input.
Yes, well, thank you very much for having us for this discussion. The answer is a very large proportion, much more than 50%. But we do have to distinguish between university spinouts, as we indeed do in our dashboard, that are university spinouts where university IP is being used for the company, and spinouts in the sense that they are founded by university alumni. So if you allow both definition of spinouts, it's probably something like 70 or 80% of our investments.
Okay, thank you. Yeah, I think taking a deeper dive into the distinction between the two categories is going to be very relevant for the further discussion. So thank you for raising that already. I would ask Herbert to continue with his strategy.
Yeah, so for EQVenture, it is actually that we have 90% of our companies are coming from the industry. So they're industry spin-offs, actually. And that's actually our origin. And with only 12% is spin-offs from academia and research institutions. So that is also one of the reasons we want actually to have more in this field. And that was one of the reasons why Hermann and I have started this spin-off Austria initiative, because we want to see in Austria more of this academic spin-offs. We think that there is more potential, but at the moment it's only 10% in our portfolio.
Thank you. So how is the situation looking in the Swiss ecosystem, Lucian?
So for us at Privilege Ventures, we source probably 80% of our deals out of ETH and EPFL, the two large polytechnical institutions in Switzerland. Then we have other universities and research institutions. So For us, it's 90% at least. That is directly a spin-off, not even graduates, but a direct spin-off out of the university. We are very lucky because of that situation in Switzerland.
That's impressive indeed. Markus, how is the situation on your end?
Well, for us, it's obviously almost 100%. I mean, I don't want to turn this into a competition, but the whole premise on which ISDQ was founded is actually to create an institution that is targeted to university spin-offs. So when we started this 3 years ago, there were, I think, 3 drivers to this, right? One was that the Austrian venture capital market is really historically, I mean, I don't have to tell you, Nina, but obviously the audience, subscale, and it's not 10%, 20% subscale. It's like, it's 30 to 50% of what it should be compared to the European average in terms of size, right? And also in terms of institutions. So that was one driver. And the second was that I think the spin-off ecosystem is actually quite vibrant in a couple of places. There are things happening, but that's a pretty recent development, right? And recent means that there is not a lot of tradition. There are, very few serial entrepreneurs who are doing it for the second time. All these really smooth processes at universities that you have in places where this is going on for a decade or something, that's still missing, right? And we thought that we can add to that by creating a new institution that is funding that. So that was really the driving factor. And that's the reason why 100% of our portfolio is spin-offs.
Amazing. So we've talked about portfolio structure a little bit already, but what are the investment criteria in terms of topics that you're looking at, and also in terms of stage when you're starting to talk to the companies? So I suppose coming from university, what unites us here is also very much early stage focus. But in terms of the verticals and categories you're looking at, is it mostly deep tech, or what are the topics where you see the most promising projects coming directly from university and research being conducted at the universities? Who wants to take the question first?
Go ahead, Lucian.
Okay, sorry. We are seed investors, so we are close to the universities, and we like to do deep tech in the sense of what I call, or what I heard here at MIT in Boston, tough tech. This is stuff that's really difficult, that is not easy to copy, which I like too, because you have an automatic moat built around the company. So I love that personally. The problem is at the exit, because the tough tech stuff is also tough to scale. So when you have some software that scales very easily, that is easy to copy, but if you raise 100 million, then you can just steamroll everyone else in your sector. That's a different story. Tough tech, the exit side, I haven't quite solved yet.
But if I may ask a follow-up question immediately, in terms of exiting this, what are the timeframes that you're potentially looking at? So you haven't solved it yet, but what are your expectations in building companies that are then globally active?
So in Switzerland, it's very clear the average time from inception of the company to an exit is 7 years. Now, of course, there are all kinds of different divergences from the average, but it is 7 years.
Okay. Thank you. Hermann, please, if you would continue.
Sure. Just like Lucian, actually, I like the term tough tech because I enjoy doing things that are really difficult for exactly the reason that Lucian hinted at, that if something is really difficult, you can normally get patents and know-how protection, so that if it finally works, you've got a very defensible position, so that other people can't just realize, this works now, and copy it. But it typically takes a longer time, because these deep technology plays, especially if they are hardware plays, might take some time. I think our average is probably similar, around 7 years. But we've just exited a company very successfully at a $2 billion valuation after 18 years. So
Oh.
sometimes, we hang in there for long periods of time.
Yeah, well, apparently it also paid off, which is great also for the founding team, I assume. Amazing.
Yeah, well, it didn't look as if it was going to pay off a number of times. Sometimes it takes a long time for companies to really hit their stride.
Yeah, I think the term tough tech is probably valid for many stages of the companies that we're looking at. Okay. Herbert, what are your personal stories when sourcing companies from startups?
So the question is focus area. So what we are looking at, and of course we're looking for scalable products. So we're not investing in services to make that clear. And it must be within our focus area, and the focus area is our software, hardware, sensors, digital health, and semiconductors. So we're not doing biotech or life science. And what's important for us then is our team, market, product, and then exactly in this order. And this strong team, growing market, and great product. This is not an addition; it is a multiplication. So, if you have a great product, growing market, but a weak team, you should not invest. And that's sometimes, as we're all engineers, we're doing here mistakes because we are very fascinated by the product, by the technology, but actually the team is the most important thing we're looking at. And here we help also our early stage teams where there's only one or two founders, and then we try to make a team out of it. And we are very supportive because we are all ex-founders, and the 30 companies we have now invested we always help at the very beginning to help with the team, which is one of the most important success factors also for the exit. And it's really essential that the team is perfect.
Thank you for sharing this. Markus, what are you looking at specifically when sourcing deals?
So tough tech, the phrase that was mentioned before twice, was actually coined by the Engine Fund at MIT, right? It's a fund that was set up by the MIT Endowment. And it's quite similar in terms of approach to what we are doing. So we also we not only want to be early, I think it makes sense that we are there early, right? So one of the ideas behind ISDCube was that particularly in that phase when things are, still fermenting, when, there is a founder who wants to jump and the university that might license the technology and maybe somebody might want to fund this. The reason why we actually started this as a fund is to actually have the money available to turn the key, right? And we are very happy to be the first to commit, because what we have seen also in the Austrian ecosystem, and I mean, Hermann obviously is a very notable and brilliant exception, but the typical business angel, is very rarely can even have the sort of the really focused technology expertise, right? So often, there is a bandwagon of people who will join once somebody committed, right? And I think the setup that we have with the very strong faculty in the background, also where we can really do, I think, thorough technology validation, allows us to commit early and really make things happen. And then building on what Lucian said before, these things take a while, right? So also we are in year 3 of a potentially 16-year fund because, we know that things will take time. And I think it's important to have the right structure in place to be able to deal with that. And in terms of verticals, since you asked before, I mean, we are really broad. I mean, we are looking at biotech. Chiara Gigante was here in the morning from Vitra Lab. We backed them. We are backing software startups. So it's really broad. And I think with the structure that we have of also broad faculty in the background and the institute, we can also do that.
Thank you. So it was already touched now in both your input, Markus, and also what Herbert said. When you doing investments in the early stage phase, apart from the two things that Markus already mentioned with the prototyping and Herbert, also with bringing people on board, how much time do you spend with your early investments in like the very first months, so like 6-7 months, in terms to make sure maybe they are not so business focused yet when it comes to pricing, business modeling, getting people on board, etc. What structures do your funds have in place to help? Or are there also propositions where you're like, okay, we can't help you there apart from being a sparring partner? Yeah. So Lucien, what do you think about that?
We get involved very, very early at the seed stage. And so typically the entrepreneurs are young and the team may not be completely formed yet. So I'm just closing 2 deals right now with companies in Lausanne. And I'm going to have to join 2 more boards, which is the last thing I want to do. To provide the kind of corporate governance. It all starts at the top, right? I mean, if the board is not good, the rest of the company, the management is not going to be good, and then the rest of the company is not going to be good. So the board is where it all starts, and that's where we as early investors can add a lot of value. We are very happy to get out of the board as soon as the next level of larger VC comes in that has better contacts and can move things around much faster than we could. But at the very early stage, I think it's important that we help the management. And sometimes I'm on phones with CEOs on Sundays in the evenings. They need help with personal issues. They are overwhelmed with all kinds of stuff. And I sometimes feel like a psychologist. And that's part of the job, and I'm okay with that.
I can relate, definitely. Hermann, do you always take over the role of a psychologist with your companies?
Fortunately, not always, because it's not always necessary. But as Lucien said, unfortunately, often it is. Because very young, especially very academic entrepreneurs, don't really know the ropes yet. And they have sometimes very strange ideas of what a company looks like and what their role in the company should be. So building the team, as Lucien and Herbert pointed out earlier on, is one of the key functions of any early stage venture capitalist. And having been an entrepreneur yourself, which some of, actually most of our VCs have, makes a big difference. Because if you've actually run a company and made lots of mistakes, which we all have, first of all, that making mistakes, just is part of the deal. People make mistakes. People aren't machines. And the key is really, do you have the will, the energy, and the willingness to work with the rest of the team and your investors to overcome these problems when they arise, which invariably they do. So creating, again, to Lucien's point, creating an understanding board that is willing to be that support infrastructure is one of the keys to success.
Wonderful. Before continuing with the next question, I also want to make sure to send a message to the audience. So if you have questions yourself to this amazing group of people we have here in the room right now, please put them in the chat and also use the opportunity, because it's definitely an opportunity that you don't have every day. And I'm very happy to also include questions from the audience in our conversation. Until then, I will continue with the questions that I have on my mind, where the next one is something that has been discussed in Austria a lot, and where I'm really looking forward to hear your thoughts and your experiences on the matter, which is really the spin-off process that we see at universities in comparison to really global universities or international universities that you are working with your funds on a daily basis. So what are your experiences? What is particularly good, if there is something like that, I hope, and what can be improved? And I see Hermann smiling already, so maybe you want to kick off the round on this.
Sure. Well, this is a big problem in Austria, quite honestly, because it's not a process that's very smooth or very fast. And the sad thing is that most of the larger universities, research universities in the world, be they Stanford, MIT, Harvard, Cambridge, or Oxford, Imperial, they've all homed in on roughly the same process. And they all realized that actually the most important thing is to have a formula so that they don't reinvent the wheel every time there is a spin out. There is a sort of a rough formula which is between 5 to 10% of the company for all the IP that you can eat. So this is not a difficult formula. And the important thing is that the process is smooth and fast. And I've come across so many instances where it took up to 2 years to negotiate the IP agreement, which is just crazy because it could mean that after 2 years, the opportunity has disappeared. So this is one of the major things that we hope to achieve with this spin-off conference is to convince the Austrian universities to just adopt the international standards of 5 to 10% of the company for all the IP it can eat, and do it in a week or two, but not months. So this is our plaidoyer here.
Yeah, so a very clear message. Herbert, please, you want to add something?
Or even simpler, do it in a standardized license agreement. It's because many universities are not yet ready for having a Beteiligungsgesellschaft. So standardization is the key, and just make it public. So try to find the standardization and put it on your homepage. And from there on, you can improve it.
Markus, does this also reflect the experiences that you have made here in our beautiful region?
Mm-hmm. Yeah, I mean, both actively and passively. No, I mean, we are playing a dual role because we are also the tech transfer office of IST Austria, or some of our people are. And at IST, we implemented exactly what Hermann mentioned before, and also Herbert, both. I mean, it's a standard formula we're having. We don't not only have the intention, but we're also equipped to actually take decisions within a week or two. But
I know you're the exception.
So I think that works. But sort of from an ISTQ perspective, we obviously see what's happening at other universities. I mean, we did investments now in spin-offs from TU Graz, Medoni Wien, CEM, so Academy of Sciences, TU Vienna, so 6, 7, 8 different institutions. And it worked actually reasonably well with most of them. I think once you understand sort of where the real trigger points are, and what is complicated within a university and what is not complicated, things are, I mean, it's still complicated, but it is improving, I would say, right? And I think the important thing is that there is a clear policy. So, everybody from the Universitätsrat down to people who are actually, negotiating, really have a common clear policy so that there is no need to circle back and forth between these levels of hierarchy, which is a real issue, at a typical university. So that's important. And for investors sort of to recognize what is possible, right, and what is really complicated, then things can work reasonably smoothly.
Okay, also some positive vibes, which is good. Good to see and good to hear. So, Lucien, how is your take on the Swiss market? Is there anything that we can maybe learn or implement here in Austria or also in other countries?
So I've been investing actively in Switzerland for more than 10 years. And 10 years ago, number one, Switzerland was a desert. There really wasn't much going on. So I hear all this lamentation about Austria being very far away in terms of venture capital. It's true, but Switzerland was there 10 years ago and things really have improved. Secondly, to answer your question directly, 10 years ago, the licensing process out of ETH and ÖPFL was a nightmare. Every deal had to be negotiated separately. It took forever. The hierarchies that Herman mentioned, and Markus as well, that has now mostly stopped. It's standardized, and it has improved things dramatically. So I can only, in selber Hornblasen, as we say in German, I can only approve and say, if there's one thing you can do to accelerate spin-offs, it's to standardize the process. It doesn't really matter what you standardize it on. Is it a license fee? Is it participation in the equity? There might be some institutional issues that one is easier than the other, but standardize and make it easy.
Well, 10 years is actually not that long. That's also good news. Thank you for sharing this. I mean, also looking at the case that we have been arguing about this already also for quite some years on this market. But I mean, still, that's something that all of us really can experience and realistically can use as being an investor or acting as an investor. Okay, that's very good to hear.
I think it could still happen within our lifetime.
It most definitely, Markus.
There is hope.
Yes, that's what I definitely would say and hope, yes. Also looking at the cases that you have been investing in, especially let's focus on the startups that are based here in Europe. Where do you see the particular strength when it comes to certain areas of research and also looking at future developments, how we can stay competitive as a continent even, or as a region? If you look at the DACH region, is there certain areas where you say, okay, this is going to be a differentiator in the future? Or is Europe basically reflecting the global trends that are visible on the overall investment market? I would ask Herbert maybe to kick off this round if you already want to comment on that.
Yeah, I think Herman has a better overview of the world because we're only investing in Austria, but we have hubs outside that supports the companies here. But Herman is investing globally. So Herman, please.
Fair enough.
Well, I have a particular preference here for four sectors, starting, of course, with AI and machine learning, which is one of those horizontal new technologies that really touches almost every sector. So it's in a way a technique that's a horizontal sector, but it is a very important new technology. Blockchain and smart contracts are surprisingly important because they allow automation of business processes that we couldn't do before. Quantum computing is something where Europe actually has excellent universities and very few startups. Herbert and I have just done one in Innsbruck called Parity QC that we're very excited about. It's a very efficient architecture for quantum computing. But my favorite, and that's the fourth and last, is synthetic biology, because of two reasons. One, it will have a major impact on us as humans, because it's understanding life science at a very basic level and can have a major impact on healthcare. But also because Europe is actually quite strong in healthcare. We've got an excellent health system, we've got good health records, and in combination with AI and machine learning, this is an area that I think potentially long-term is the most important of the three. And of course, our own success stories with BioNTech and various vaccine companies, we can build on that.
Wonderful, thank you. Anyone in the group that wants to add something to that, an area that we have not mentioned? Yes, please.
So I'm speaking from the US, and I always have a very US-centric perspective ever since I studied here and built the company here. So we in Europe should not think that the US is ahead of us in all respects. And on the contrary, I think European technology has caught up in a lot of areas, except for military applications and space stuff. But in many other areas, Europe has caught up. I agree with Herman. Life science, we are particularly good. I don't think that we are very strong in social networks. That's a very American thing, is to connect people, and they've always been very open and connection-oriented society. So that's why they completely dominate that sector. But just the hard tech, the tough tech stuff, we have some real pearls, but we tend to not grow them long enough. And then they are sold to the Americans, who are always the ones willing to pay market price. Now, when I see that in the exit process, who wants to buy someone? There's some Asian players, there's some European players, and the Americans, they know what the value might be. They're not always right, but they are willing to pay that. And the Europeans want a discount, the Asians are not so sure. And that's why the Americans end up with those gems.
It's a very interesting take. Thank you. Markus, anything to add from your end?
Yeah, I think we have been investing in all the 4 areas that Herman mentioned before, with a particular focus on biology. So 8 out of the 11 companies that we've backed so far are biotech. I think particularly in Austria, that's the strongest single vertical that we have. I think both academically, we have very strong scientific institutions. We have a world-leading clinical research hospital, which is, very frequently underrated, I think, with the AKH in Vienna. And, the past 5, 6, 7 years have shown that really great companies can come out of that. So that's really, if I would have to pick one, then that's the one.
Thank you. So I would want to circle back to really the early stage investments and deals that the 4 of you are doing. So a question that also pops up a lot, especially with teams that come straight from university or from a research background, is always the question about cash versus a sweat equity, or a combination of both, of course. Where, especially in the last years, we've also seen some dynamics when it comes to sweat equity that are not always reflecting like the most fair approach, I would say, from a founder perspective. How do you handle questions like that? And do you also enter deals where co-investors are primarily offering sweat equity? Is this something that you accept? And I'm open to hand on the question to, I would say, Herbert, and would then go through the round.
Yeah, so we keep it very simple. So we are, as we are all previous founders, so are the 12 core team members of Equentia are all former founders. So we don't see ourselves as a venture capitalist. So we are actually ex-founders, and we talk founders to founders, and then it is not something that where we split between our sweat equity and real equity. We say, okay, give us a fair share, and we will help you, and we'll try to push the valuation immediately for the next round. That's what we offer. So we keep it simple. And when they say, okay, what is your sweat equity? Then we say, just call the other founders we have backed. And this is the best reference we have. After they have called all of them, then they come back and say, can we do it together? And that's how it works. And what we bring in is, of course, all the mistakes we have done, like Herman said, which were very expensive, all the network, all the advices. And at the beginning, this is most important for the company, because you can get grants. The seed money is actually easy today. But what is very important is your first investor, and this is a marriage. And in contrast to marriage law, in company law, there is no clear regulation for how to divorce. So you can make this choice only once. So that's my recommendation to founders. Choose your investor with great care.
Very much agree. Markus, how do you handle your early stage deals?
So your question before was, do we accept sweat equity? And I would say no. So it's very simple. I think sort of classic traditional sweat equity deals are are a feature of lesser developed equity markets, I think, and we have seen a lot of that in Austria, during the last decade. When we started, we really wanted to do deals that are on an internationally accepted level, right? When a Series B investor looks at it, the seed term sheet, from wherever they are, they should recognize that this is the same style that is done in the US right now, and that's what we are doing. And we are very transparent with this, right? Our term sheet is on the website; everybody can see what we are doing, and I think classic sweat equity is a thing of the past.
Wonderful. Hermann, do you agree with that?
Yes, I do. And in the same way that we had this discussion about IP being formulaic, there's sort of rules of thumb of investment rounds as well. And the rules of thumb are you really ought to part with between 20 and 35% of your equity, because if you part with more equity, then your dilution is too high. If you part with less than 20%, you're not raising enough money. And the other way of looking at the raising the money is that you really need to raise enough money to keep you going for 18 months to 2 years, so that you're not out there raising money all the time. And investors know that these are the rules, and they're sort of looking for deals that look a bit like this. And then help people. I mean, the key is that in those 18 months to 2 years, you've got to get yourself to a milestone where you've proven something so that you can raise more money at a higher valuation. So this is not difficult. These are the basic rules. And if you can convince your investors that you can raise money at a higher valuation, then the valuation also falls into place. So all these things interlink. And, Marcus again said it exactly right. You basically have the term sheet on the website. It's pretty standardized.
Thank you. So, Lucian, is this also what you have been seeing in your area?
Yes, and I would like maybe to, because I fully agree with what was said before, so I'd like to diverge a little bit and say it's dangerous for founders, inexperienced founders, to give away too much of their company to a greedy investor early on. And in today's environment, a greedy investor is going to be a bad investor, because they're specifically not within the international standards that Hermann mentioned. And if you give away, because you don't know any better, if you give away 50% of your company in the first round, no one will touch you again, because there's just not going to be enough left for management down the road. So be careful and do what Herbert said. Do your due diligence on your investors. It is a marriage, and it's not just a one-way due diligence from the investor to the entrepreneur. It's a two-way process. And the portfolios are all on our websites. Go and pick up the phone, talk to the other CEOs, and listen to what they have to say.
Exactly.
Yeah, so I think those were some very relevant recommendations already, and we are already also moving towards the end of the panel. So also, again, to the audience, if there is a burning question that is on your mind now, please ask it now, because soon the opportunity will vanish. I just want to highlight that. But until then, what are your, on the one hand, what is your outlook on the spin-off market, if we can call it a market? And in addition to the recommendations that we've already heard in the last two rounds of questions, what is your number one tip for founders that are thinking about raising their seed round in the foreseeable future and are a researcher right now or coming straight from university right now? So, Herbert, I would ask you again to start, if that is fine for you.
So, some tips. Okay, I mean, I would say for founders, choose your team, choose the right team. This is the most important thing. Don't do it alone. Try to be together with someone, maybe 3 or 4. Then focus on the customer needs. Don't start a project where you think there's a need. Start with a customer need. This is very important. And follow the customer need. So maybe you have to change your business model, but listen to the customer. He is the only way out. He's the only way to success. And well, recommendation: have a plan B. That's always a hint. I'm telling to founders: always have a plan B, whatever you do. And then what I already said: choose your investor with great care.
Thank you, Markus. Would you like to add on to that?
Sure. So the outlook on the market, I think is positive. So we've raised a 45 million fund. We've invested in 11. We will make for sure another 20 investments over the next 3-4 years. And I'm sure that the market is by far sufficient for that. So on this, I'm really positive. Sort of famous last messages. Don't be afraid, right? I mean, I don't think there has ever been a better time to start a company than now. And I'm not just saying this, I really believe this. I mean, right now, money is available. I mean, basically all asset classes are hopelessly overpriced, right? So right now, launching something new into this environment, I mean, sure, you can fail, but I mean, the odds have never been better. And even if you fail, if I look at the Austrian local system, because this is where you will then, if you don't want to leave the country once you've gone bankrupt, it is possible to start again here, right? So we are really looking for people who have actually started a company and they have failed for some reason and they're doing it again. I mean, this is how it's happening in many places, established places across the world, and also will happen here. So trying and failing is I don't think, an issue anymore.
Thank you. Hermann.
Well, I couldn't agree more. I think Markus has just said it. This is the best time, and I've been doing this for a while, maybe longer than most. This is the best time to start a company that I've ever come across, and here are the reasons. Finally, the returns of European venture capital has overtaken the returns that the American venture capital industry got. This is new. This is very encouraging. It is also the case that the Americans are finally moving into Europe. There was a big article in The Economist just in the last issue how Sequoia is setting up in London because they feel there are more opportunities in Europe and lots of others are following. So the money, although, and because there is so much less money in Europe, people have realized that the universities are good and the opportunities are here and the money is flowing in, and we also can raise more money. And finally, we've also, even in Austria, I think we've gone through the culture change that people now feel this can be done in Austria, and they have the courage to do it in Austria. And I would just like to make one last point on putting the team together, not just the team that builds the company itself, but the team of the investors. So it's normally not just one investor, but it's a number of investors. And one of the failure modes that I've seen many times is if the investor group itself doesn't look eye to eye with each other. So if the investor group is a group that wants to support the company and help it, then when there is a crisis, as invariably there will be, the chances of overcoming the crisis by everybody putting their shoulder to the wheel is much increased than if the investors don't get on with each other. So apart from building your own team to build a company, you also need to build the team of investors together with your own team.
Thank you. Very important point indeed. Lucien.
Right. So I'd like to go back to the team side of things and say what is really not that attractive to an investor is 4 mechanical engineers from a technical university with the same backgrounds, okay, as a founding team. So now the Americans have that a little bit easier because typically the business schools are close to the engineering schools and they all drink beer together in the evening and they mix and mingle. But please, my advice is go out and try to build a diverse team, also in terms of genders and nationality origins, because diversity breeds success. Because you have different points of view. If you have the same 4 clones across from you as an investor, I'm turned down. And the other advice I have is don't forget non-dilutive funding. I'm a VC, but I don't want to stuff my money down your throat. If you can find a customer, that's actually the best funding. If you can find a customer that's willing to pre-fund some development that's special for them, take that money. It's the best money you can take. And then we have so many research programs in Europe. Apply for funding, get some 100,000 or 2 million out of some European fund. That's really important as well.
Yes, that's a wonderful combination of tools and things that founders can use to build their companies, and also then to start talking to investors. Thank you so much for your input. I think it was very interesting discussing this with you, and I hope the audience thinks the same, and I hope that the founders who are participating today took some notes, because those are insights that are definitely valuable when building your tech or tough tech company nowadays. And I very much agree with what Hermann said, also from my experience in working with very early stage founders on a daily basis. There never has been a better time to build and start companies, especially also with the point of view of building diverse teams, which is something that is very close to my heart, and I think is going to be very important for, well, how our society also develops. I'm very happy that this topic was raised proactively as well, because I think it's going to be a crucial element in building, well, on the one hand, impactful and relevant business cases in the future. And I think this is now also the time to close the round. So I say thank you to all of you, also dialing in from different continents and different time zones. So thank you for being so active and taking the time and being so open to discuss all of this. And with that, I would want to hand it back to Dejan. I hope you are ready to take this over again. Thank you, everyone.
Thank you, guys. We're ready to take over. May I just ask you one additional question? Could you give us one more minute, dear panel? Edgar is asking where and how to fundraise for new tech venture capital in Europe. So I guess somebody is on fundraising for tech in Europe. Any advice where to do that?
istcube.com.
Okay. Any further advice? Other ones?
Yeah, I would say it depends on the exact business model that he's building. I think we have 4 very interesting investors on the panel right now, and I think luckily, as I've also seen in the event today, overall there should be interesting contacts to be made.
And of course, there is always the EIC, the European Innovation Council, which has 10 billion euros to spend. And I would certainly recommend that people look at the European Innovation Council as well. And the European Innovation Council can only spend money if more than 50% of the money comes from the venture industry. So it's a very elegant way of multiplying your opportunity and multiplying the venture money in Europe.
Okay, fantastic. Thank you very much. The comments go along the side. It has been super inspiring discussion. Thank you for all your insights. Nina, thank you for moderating this panel. And ciao, see you later in the chat or on other opportunities. Thank you.
Thank you, Nina. Bye.
Thank you.
Bye.